Welcome back to another portfolio update. Now this one is quite special for me. I just want to start off with going through my portfolio overview. And now if this kind of spreadsheet stuff and going into a bit of details isn't really your thing, feel free to use the timestamps. I've got it all spread out, so you can go straight to Trading 212, see all my individual stocks and shares. You can go to Hargreaves Lansdown if you're interested in all the mutual funds I'm invested in, or equally you can go into my crypto section in the video to look at all the cryptocurrencies and other stuff I'm invested in. But the reason why this portfolio update is quite special for me, quite a huge milestone, is for consecutively for the last 3 months, my interest earned from dividends and just capital gains has actually outweighed the amount of money I've been depositing or planning to deposit into this investment portfolio. So you can see here, starting back in October 2020, my last few months was that as the last month I made a loss. The following month was in November, where the actual vaccine was announced, and that month alone I earned $2,500. Where I only deposited 680, and then a month after in December I deposited 625 and I earned 658. And now in January I was planning to deposit 1,600, but I actually got a bit more money than I thought, and that was just from working extra over Christmas. I got my student loan payment, and I also got cash back from my American Express credit card, which I just put straight back into the portfolio. So that's why I was able to deposit that much. But however, my initial kind of goal was just to put £500 away a month. So to see that the interest payments and dividends are outweighing that already after just over a year of investing into the stock market is quite a massive thing. I'm quite excited about it. So now going back straight into February, you can see this month already, in the first 3 days, I've already earned £604. Now I know it's a bit skeptical because technically I haven't earned anything. It's all just on paper because I haven't sold anything, but it's really interesting to do, and that was just because at the end of January there's a bit of a dip. I didn't actually buy any on the dip, but they've all recovered now and gone up a bit more. So that's really nice to see. So again, for this month, I was only expecting to put £500 in, but in interest alone, I've already beat that. So it's really nice to see how the portfolio is growing and starting to get a snowball effect and compounding over. I know it's only been 1 year, but this should pick up quite rapidly. So I'm quite excited for that. That's quite a big milestone for me. Okay, now going onto the actual investments. My last video I talked about wanting to reach £60,000 portfolio worth by the end of 2021. So starting, December 31st, I want to have a portfolio of over £60,000. So to do this, I needed to take a few more risks. Now this involved investing in higher risk investments, so I decided to go with the ARK pies. So I've done ARK-G, ARK-K, ARK-F, and I've been casually selling off my dividend portfolio to average down. Again, I unfortunately missed a dip. The ARK portfolios have actually dropped. So if I just show this as ARK-K's previous performance, so I bought it, I think it is around, obviously I'm investing in a pie which is a bit different to the exact ETF, but they're very similar in terms of performance because they have similar weightings and similar stocks. So I bought kind of around this kind of time frame, and it shot up a bit. I was up about 3-4%, and then you can see here it dropped all the way down. I think at the bottom I was down about 6-7%, and as you can see back on Trading 212, they've all but recovered now, other than ARK-G, which is a bit slower and lagging behind than the others, but they're all about 3%, and you can see how quickly I've had my dividend portfolio for about 6 or 7 months now, and now the ARK pies are already just overtaking it. And this is just because they have a lot riskier investments. So looking at ARK-K here, you can see some of its top holdings: Tesla, Roku, Teladoc, Square. These are all very volatile stocks, which is why they constantly go up and down. So even a 6% drop on my dividend portfolio, that would take quite a while to recover, but this took a matter of days, and it's actually gone above and beyond, and that means a bit more money. But these aren't the only things I've been investing in. I've actually gone into some penny stocks as well. So I've actually created a new high risk penny stock pie. I've called it risk with a QU for some reason. But so these are some of the holdings within my riskier pie. So I have Gevo, which is quite a cool company looking at more sustainable fuels. I believe they're using like carbon and hydrogen and that kind of stuff. I don't know the details. I just invested it because someone said it was good. Like I said, I am just taking punts here. This whole pie, as you can see, is currently around £609 with £108 profit. So I've invested about £500 into this pie. And just to put that in perspective, I think that's about 0.25% of my entire portfolio. So these are really risky investments. And again, I don't know if that math actually adds up. It might be 2.5%, but they're really risky investments, which is why I've allocated such a low percentage to them. Just to go down to a bit more detail, some other interesting ones, I actually done a video on this. HCMC is one I'm really banking on, and I think it's definitely got a lot of potential to go quite massive. I'm hoping for at least 10x on this penny stock. If you want to go check out a video, check my recent upload. Is actually the video before this. I really think that's a really interesting one. Just to go in a bit more detail of why I bought it, just quickly overview, is HCMC basically they're going for a lawsuit. They're suing Philip Morris, which is an international tobacco company, because they've been using one of their patents for a vaping product. So if this lawsuit goes through, it could be over $1 billion, and the company's only got a current market cap of about 80 million. So you can see how a massive settlement like that would absolutely make the stock price skyrocket. But again, I've done a video going into detail onto that, which was quite interesting if you want to check that out. Another penny stock I'm taking a bit of a gamble on is KWBT, so Kiwa Biotech Products. So this is just a bit of an overview of what they do here. They're a Chinese company, and they're basically focusing very future forward thinking, going into sustainable like farming and agriculture market. So they use, like, you can see some of the details here. So they've got photosynthetic bacteria based biological organic compound microbiome, very like, you know, technical stuff. I don't really understand it, but basically it's a more sustainable food supply. And in China, I think, especially with the COVID kind of situation coming from eating this, obviously coming from a bat supposedly, you know, some people say that's not true, but despite it still made people think. And obviously with the rise of veganism and more sustainable kind of ethos across the globe, it's kind of a thing that everyone's striving towards, is more sustainable. Food and agriculture is a big market for that, so it's quite interesting them kind of taking the development into this kind of area. But definitely there's a lot of potential here. Of course, just because that could be a growing market in my opinion doesn't mean KWBT will be the ones to do it, but they're one of the ones that I found and have got a bit of a hype around, again, which is why I'm investing in it. So as you can see, I'm not too detailed in any of these. A lot of them are just punts. I'm not going to lie to you. I'm not some, you know, massive intellectual researcher who knows everything about stocks. I don't, or even the companies or what they operate in. I'm just taking gambles, and most of my money is in mutual funds and index funds. So the final one I want to go through on my risk pie is AMC, and that's because in my previous video I talked about how I'm going to be buying this because I'm hoping it would follow GME, GameStop. So since my last video, I actually bought about £50 worth at $3.50. Since then, I have actually averaged in some more, putting my average price up to $5.76, and I've got just over 28 shares. And since then, I bought that, I think that was $13, which brought the price down, and you can see it's bottomed out here. But what's quite interesting is in the pre-market, AMC's actually shot up again. So you can see here, I've took this about 12 o'clock midday, so about 2.5 hours before the market opening, and the pre-market is currently up 6%, which isn't massive, but you can compare this to the Volkswagen short squeeze back in 2008, I believe it was, how it originally shot up, had a massive drop of about 60-70%, and then skyrocketed again. So I'm still banking on this. I'm still holding out. Again, I didn't put money in. If I lose, it's really going to affect me. Like I said, from interest alone this month, I haven't even deposited yet. I'm still up £600 on my portfolio. So putting 50, well, I've put more money in, so about £100 into this stock. Whilst it's quite a risk, I got such a good price as well. This is post-pandemic. I think this could recover to above that price anyway. Obviously, I will sell. My original target was 100, but with all the volatility, it has made me a bit more nervous. I'm still not going to sell, but I think when it gets to kind of $50, I think I will sell half of my investment. Or I'm saying if it gets to $50, I'll sell half my investment, and then I'm going to let the rest ride out. But my absolute limit will be $100. If it reaches that, I will be selling everything. But like I said, that's a huge gamble, and that's not you know, low probability. It's not exactly likely to happen, but that's why you take these punts. That's the kind of risk and reward ratio. So you want to take these risks, you want to wait out for the rewards, you don't want to sell too early. Now my final investment on Trading 212 I want to talk about is NEO, because this is currently my largest holding on Trading 212 now. I think in my last portfolio update I had about 10 shares, about 450. Since then I've averaged down again. I put about another £450-500 in. You can see my average price is $60.41, totaling of a value of £852. I'm currently down £72, 7.82%. And again, now this is just where NEO has fell with the general market. Like I said with the ARC pies, they was all down 6-7%. And obviously NEO being a single stock, it can be more volatile and the price won't be as reflective as the whole market. But with that being said, it also means it can have a lot bigger returns and make more money in the future. And I still believe it's a really strong long hold investment. And I'm still banking on it going up. I believe that earnings report comes out in March. And in my video I'm talking about why I bought NEO, I actually mentioned about how they couldn't just keep up with the demand. It was so massive, so I'm really expecting a really good earnings this quarter coming up. Like I said, I believe that is in March. So I'm holding out to then see how the price kind of holds up. And even past then, I'm going to be holding NEO for the long term anyway. Now moving on to my Hargreaves Lansdown portfolio. You can see its value has gone up massively since I last posted a video. And this is for a few reasons. It currently sits at £19,270, a nice round number. This is because I deposited an additional £1,400 from my cash reserves. So I put that into my lifetime ISA. And also from the money I've deposited in my lifetime ISA in the last few months, I've also received that bonus. So for those of you who don't know, for up to £4,000 a year, the government tops up 25% into your lifetime ISA. So I just received, I believe it's £650 If I just go into my transactions here, I can check. So yeah, so I got my lifetime ISA bonus there. So I got £650 put into the account where I can invest that, which I have done. And I bought just the mutual funds that I've been just cost averaging into. So these include Bally Gifford American, Bally Gifford Positive Change, a European index, FTSE 350, 100 and 250 separately, a global bond, a corporate bond, and an income mutual fund. So these have all been pretty stable. It's quite a massive gain for a lifetime. So I'm taking, again, a lot of risk with this because I will actually need this in under 5 years. I'm looking to move out in the next 2 years. So it is quite risky having the money in investments, but my thinking behind it is I've got 2 more tax years before I'll be going to buy a house or a property, which is what the lifetime ISA is used for. So if the price drops down, I will have a lot of money to go in and cost average. So that's my kind of thinking. I won't be putting money into this as soon as the tax year opens. I will be waiting till the next one for various different reasons. On to the main ISA on my account. So you can see here it says at £8,145. And this has been, it's very similar to my lifetime ISA. However, one main difference is my shares in Mitchell and Butler. So, you know, for many of you know, the reason why I bought this was one, because I thought it was quite a good company and I thought it was quite cheap. But also I bought it because you got the shareholder discount booklet. You're supposed to receive that end of December or middle of January. However, I haven't received that, so I quickly emailed over to Hargreaves Lansdown. They replied with this, basically just saying, due to obviously the COVID pandemic, just things have been thrown about. So they are still expecting to send them out, but it'll just be when they return to the offices in the meantime. They don't have a current timescale at the moment, but we are expected to still get them, which is quite nice to see. But also even nicer to see is the actual shares I bought are up 117%. So this has been my best performing stock in any kind of investment I made. International Airline Group was a close second. I think it's sitting about 60% at the moment on my Trading 212 account. But Mitchell & Butler has been the best performing stock that I bought. Obviously, with anything you wish you bought more. But for the main reason I bought it for this shareholder discount booklet, I'm really happy with that investment. And again, these are really nice long hold. So I'm quite happy I bought them. Other than that, it's like I said, it's pretty similar to my lifetime ISA. Just the mutual funds, index funds, just doing their work, just building up money passively. I can just invest, forget about them. So it's quite nice to see and just leave it in the background. Finally, now another one of my best performing assets has been my crypto portfolio. Again, I'm quite well diversified in crypto, my main two being Bitcoin and Ethereum. I wanted to invest into some of the other altcoins just so I get a bit more exposure and a bit of a similar like Bitcoin or crypto ETF. But the best performing one in recent weeks has been Ethereum, especially in the, well, you can see in the last day it's gone up about 10-15% in the last week. And my initial deposit, I think over the last few months, I've invested about £150, and that's now worth £442. Unfortunately, Coinbase don't actually show profit and loss, so I do actually hold this on my spreadsheet. So if I just get this up here, you can see I show my whole like crypto portfolio. I deposit £1,800, it's worth 1946 odd, which is a 143% increase. So I was trying to look at what the kind of price is, why Ethereum's been increasing, and basically it's just been because where Bitcoin's been quite stable recently. It's been kind of getting a lot of media coverage. It's been quite stable, holding about the $30,000, £25,000 mark, and that's giving people a bit more confidence to buy into it. And naturally, that means that by like association, other cryptocurrencies such as Ethereum are doing well, but also Ethereum's got quite a good use case, and it's being used more across industry, which just means it's more applicable and more people are buying it to use it. So that's just kind of like some rough figures. Of course, that's not concrete. It's just from some old articles I've been reading. But it's a good indication of kind of where it's going, and if it keeps being used more and more, I'm hoping the price will continue to go up, so I'll continue to hold. One thing that I am actually thinking about doing to change in my cryptocurrencies is actually moving it over to BlockFi. Now this will only be for my Bitcoin and Ethereum, and that's just so I can interest in them. So I've set up an account here. I have a few problems with it, the main being I don't know too much about it. From what I've read, it's all like US based, and a lot of people, again, they're very cautious about holding their crypto on something like this. So it's like an exchange, it's not cold storage, it's not offline, so it is susceptible to being hacked. So I've put in just about, I think it's about £10 worth of Bitcoin, and another problem with this is that it's US based, it's all in dollars, which isn't a problem. I can convert it on my spreadsheet quite easily, but it's still nice to just have in plain sight in Great British Pound. So the reason why I'll be moving to BlockFi is, like I said, to earn interest on my Bitcoin and Ethereum. So currently Bitcoin, if you have it on this account, you earn 6% per year in interest, and where Bitcoin's been quite stable recently, that's really good to see. And Ethereum, you get a 5.25% average per year. So again, these are two things I'm kind of considering moving over to BlockFi, just to get a bit more interest and earn money on my cryptocurrencies instead of sitting on Coinbase and just not doing anything. But I'm not too comfortable with using ledgers or anything right now, so I'm just going to see how that goes, and then I'll decide whether to move it all over to BlockFi or leave it on Coinbase or go to cold storage. Depends, I'm just going to keep reviewing my options and see what's best for me. Finally, I'm just going to go into my Freetrade account. So I've actually sold all my holdings on Freetrade beside Microsoft. AMC, for the same reason I've got on 212, just to hold it. It was actually a free share I got a few months ago, and just hold and to see what happens with it. The rest I've all sold, and I'm actually going to start buying Virgin Galactic, SPSC, just again because it's speculative. It's all I'm only using free shares on Coinbase. I've got a few here, so again, if you want to sign up to Freetrade, get a free share, use my link below, we can both get a free share. And so when I get these free shares, I'm just going to sell them and buy into Virgin Galactic. And again, I'm just doing this because it's still quite a risky stock. However, where it's all free money, it's just speculative and I can take the risk with it. So that kind of sums up my portfolio performance. I will be depositing a bit more money into it in the next few days. As I said, it's only the first, or it's the third of the month so far. In a few more weeks, my direct deposit will come out. I'll get paid and I'll put more money into it and cost average the rest of my holdings. So let me know how yours has fared up in the last few weeks. So I know the market's been quite volatile. I'll be interested to hear. Thanks for watching.